Hello, everyone, and welcome to the continued series of webinars from the Fiducia Commercial Network. Today, I'm delighted to be joined by the CEO of Reward, a seasoned professional within the commercial finance industry, Mr. Nick Smith. Nick, welcome. Thank you for joining us today. Nick, to kick things off this morning, I read recently that this is your 10-year anniversary with Reward. Can you tell us a little bit why you decided to join Reward from actually you work with some other quite well-known names within the industry? What made you make that decision to go there? Initially as an MD, I believe.
Yeah. Thank you for inviting us today, Norman. Great opportunity for us to talk to the team today. 10 years at Reward, you called me a seasoned professional. I don't know what that is. Does that mean I'm old? I'm not quite sure. I've done 10 years at Reward, and then I guess I've been in finance and banking all my career, and in the kind of independent ABL sector for 20 years really. Working for some fantastic businesses, Aldermore in its very early days, Ultimate Finance, and then 10 years here at Reward. Initially, my decision to join Reward was a small business. I knew the original guys who'd set it up. It was a bit of I won't say startup. It was a few years old, but it clearly had good growth potential. And the idea was effectively to come in and manage a transition from the incumbent MDs across into a bit of a succession plan, and me stepping forward as MD stroke CEO as it moved through. So we started that journey 10 years ago, primarily almost kind of back on the tools, doing deals and sales and that type of thing as we were trying to grow the business. So 2 or 3 years of effectively doing BD, relationship management, everything going. And then as it's grown and got bigger, the roles evolved into effectively a kind of group MD, CEO role. With one of the founding directors is still in situ. The other founding director moved on a couple of years ago. So so I have the joys and delights of running Reward on a daily basis, and I absolutely love it, Norman. I absolutely do. I think I've loved every business I've worked in. This is no different. We're good at what we do. We make some mistakes along the way. Don't get me wrong, but we have we try our hardest, and I love it every day. Not a problem. It's not a job to me, Norman. It's kind of part of life, if I'm honest. I'm not trying to be like that, and that's just true.
That's what makes it fun, Nick, isn't it? If we're actually doing things and getting paid for it and enjoying it as well, it makes it a lot more fun, and equally absolutely a lot more. Dare I use that word, rewarding as well. So. But look, let's get into the nuts and bolts of things. So I've got a few questions I want to sort of ask you today that I think can help our appointed representatives across the network. Given all the economic challenges that are going on across globally at the moment, we can only control, what we can within the UK. From your viewpoint, where do you see the biggest funding challenges for the SMEs currently in the UK market?
I mean, I think you're right to acknowledge the kind of wider issues around challenges that SMEs face around certainty and uncertainty and what's going on at macroeconomic level, etc. I think one of the main challenges from a funding point of view actually is a positive and a negative, and I think one of the main issues is choice. There is so much choice out there and so many lenders out there, and it's difficult. It's difficult to really make sure that the funder or the borrower is talking to the right lender with the right solution and the right product, and you end up sometimes in a world where there's a quick no is as good as a yes, and I think that's one of the sort of challenges out there really is that where do people turn to? There's the traditional high street routes, there's the alternative finance route, and how do you navigate that kind of plethora of different funders and names that a lot of SMEs just won't know because they just know they want cash. I want cash for something, and then you've got to try and decipher that and move it forward. And then obviously from a credit point of view, when lenders are assessing businesses, it's extremely difficult when you're trying to look at what's happening with interest rates, what's happening with supply chains, what's happening with cost basis because of employee rights and changes to minimum wages. There's so many factors to consider as it kind of goes through. But so I think it's a big problem for SMEs is where do you go, and I think that's where the broker keys plays a key part, because they can play that whole of market approach, but actually narrow it down to a solution that's actually fit for purpose.
So perhaps you can help us with that then, Nick. So typically, what sort of cases where it's been declined elsewhere from another funder where perhaps it's not been suitable, but Reward's been able to step in. Is there anything that sort of sticks out for you in terms of, yeah, we've seen some good examples here where where we've been able to help. We'd like to do a bit more of that.
Yeah, I mean, I think, we don't take a one size fits all from a credit point of view. We're looking at a deal to look at what's the security, can they service the debt, and how do we get repaid? Because we're a short term, effectively overdraft revolving credit facility type funder. So we're looking at security, serviceability, and exit. And in those scenarios, that gets us into deals that have got seasonality. It gets into deals that have got poor trading history, adverse credit, all that type of thing. And actually, it's about getting beyond the skin of that. We don't do much kind of approved underwrite, or much losing my words here. We don't do much underwriting that's generated from the computers and the systems and auto approval stuff. It's all done manually, so effectively we're looking beyond that. Some of the data points are all automated, but the actual underwriting and credit decision itself is done on a manual basis. And that's because I'm a believer that you've got to really understand what the client is and who they want. And we meet every borrower and we see every piece of security, and that's reasonably unique in this market. But I think that's what it should be, because at the end of the day, you're talking to somebody who's passionate about their business. You need to understand what's going on, how they operate. It's a bit whites of their eyes type thing, and that is a bit of an old school approach, but it's served us well over the 14 years we've been in here. I think the difficulty on it, I had a great example on Monday of a deal where I got the lead in direct and spoke to the borrower, and he was looking for £1 million because he'd gone to his high street bank to increase his overdraft. He'd had a tough 12 months. And he'd been waiting weeks and weeks and weeks for the bank to make a decision, and it was now getting critical because he was buying stock and he needed the cash for the stock, and we were looking at something. He got a property portfolio on the side, so it was reasonably straightforward for us. So we got involved. We got invited in on Monday, and you could clearly tell the borrower was in a panic because he'd got orders waiting to be paid for, etc., etc. Didn't think the bank would come through. So we got talking about what we'd do, and he was kind of, well, we'll get this done within a week or two. And I'm like, yeah, but we've got bank deed a priority with other things to deal with. In the end, actually, the bank have done the deal and they've improved, so they've actually done it, but it's taken them weeks, and the stress that the borrowers had to go through to get to that point. And because it's taken so long, he has no alternative route. So he'd come to us, we could have done the deal, but he needed the cash within a matter of days. And because of the structures and the complexity, it would have taken a bit longer. So I think it goes back to my quick no, quick yes. There are examples where borrowers just get pushed so far down the line simply because they can't, not they can't get the funding that they need, but sometimes it just takes so long that it's just difficult.
I think just on that then, are there any sort of examples where you believe flexible structuring from your point has unlocked a case?
Yeah, I mean, we saw business. I mean, we've talked about this on our press releases a lot. We did a business out of our London office for a business that was involved in footwear, primarily for schools and stuff. And that was where the bank, it had a bit of a tough time primarily because of COVID. I mean, go back a couple of years here now, because obviously for a long time, all the kids were at home. And I had a high street bank overdraft that just got pulled out overnight for no reason whatsoever. And there was plenty of security in the deal. You just had to understand the cash flows, because obviously it was a high stock up kind of scenario early in the spring, mid-spring, be sat on loads of stock, and then all the stock would disappear out and turn into cash at the end of the year. When all the school shoes effectively got sold through to the retailers in August, September time. And that's just about understanding the mechanics of the business. That's not about having a computer algorithm telling you whether the deal can or can't work. But you've got to get under the skin, and you've got to understand the client, and that's a key. That's a key point for us as lenders, but also for networks as well, and brokers up and down the country. Got to understand what the need of the business is, and then understand who can do that deal and who will take a view on actually what that is versus somebody who's just not in that space. I mean, we did an overdraft effectively in that business of, I think it was a couple of £1 million, and it goes up, down and all over the place, and the solution works absolutely fine. It's still a client today. If you'd have gone for a term loan, it would have failed miserably because you can't service the debt in the down period. So that's about understanding your customer and understanding the cycle to go, well, actually, our facility is going to go way out at one point, and then we'll be back at zero. But not every lender likes that, and you've got to understand that and understand what the lender wants as well as what the kind of client wants, and make sure the solution works.
So in the last couple of minutes, Nick, you've talked quite passionately about knowing the client, understanding the deal, that type of thing. Are there any sort of top tips that you can support the brokers with, that sort of thought process that would make it a little bit easier for Reward to be able to move a bit more quickly and structure things a bit more quickly? So we know that you are in that secured space, it's short term. We want to try and help those customers, but is there any sort of top tips where we can give you some sound bites quite quickly to get things moving, rather than starting from scratch, if you like, from experienced people working at Reward?
Yeah, I mean, I think there's a lot of lenders out there. So I think from our perspective, and effectively from Fiducia's perspective, getting to understand the need of the client quickly is key. So, can we get security? Can they service the debt? How can we get our money back at the end of the process? They're really the only three things we're worried about. They're the first three questions that our guys will ask. And then obviously a bit of track record on the borrower and go from there effectively. But if you were talking about Reward on its own, that would be the key point. If you've got a client that you think is a Reward deal, is there some security? Is it tangible, etc.? Because we're a secured lender. Can they service debt? Because we're not particularly keen on rolled up deals. We'll do them, but we're not massively keen on them. And how do we get repaid at the end of the 12 months? And you really need two of those normally, if I'm honest. And if you've got always need security, but you can have loads of security and less on serviceability because we'll take a view. And the exit's always a bit more awkward. But that will be the key. Cut to the chase quickly. If it's a Reward transaction or you think it is, security, serviceability, exit. Beyond that, we'd be able to tell you within a minute or two. And one of my BDs would tell your guys within 5 minutes whether it's a deal to look at or not.
So then, looking at the positives of this, when a case is being structured, how does Reward prioritise between cost, speed, and certainty for the client? So you gave that good example before where actually the high street came through for something. But overall, how do you balance that in terms of cost, speed, and certainty for the client?
So we have a kind of pricing matrix that the business follows. So it's a standard pricing approach across the country, as you would expect, because that's kind of the right thing to do, treating the customer fairly. And speed and certainty. So certainty, we talk a lot about speed, but certainty is more important, we believe anyway. We have very quick, short lines of underwriting in terms of not particularly getting a full credit approval on the deal, but moving through into taking that deal out of the market and making a decision quickly. And we have, for example, credit committee stroke deal forums every single day at 2:00, 5 days a week, and any BD can drop a deal in, and like today, 2:00, if there'll be somebody dialing in with something. So very quick to take that deal out of the market. Speed is an interesting one, because unfortunately sometimes you've got third parties in the mix and you've got valuers and all that type of thing. But it's about understanding, for me, where your time pressures are early in the deal. So if you've got a deed of priority that you need with a high street bank, you know for a fact that's going to take 6 to 8 weeks. So tell the client, tell the broker, get that process moving early if that's what we need to do. Engage with the bank manager. So it's about understanding where are the kind of time pressures in a deal, and where you can move quick and where you can't move quick. And then we get multiple processes going at the same time, which we did a rebrand a couple of years ago, and the marketing guys rang up a number of introducers and clients, and one of them said, the good thing about Reward is they twin track deals. And we went, what does that mean? And he said, well, basically, what you guys do, we didn't really see this as a USP, it's just what we do. We get multiple processes going at the same time. So you'll have a term sheet that's gone out. If that's signed and accepted, we'll start the legal process. We'll start the valuation process. The customer will be filling in the forms, and we haven't started the credit paper. So instead of going through a kind of sequence of events of a deal through lead, qualify, application, we get the whole thing running at the same time, which means you can do things at pace, but also as a result of that, you are pulling out the kind of questions and the kind of getting the answers that you need as you go through the process. But yeah, twin tracking, Norman, apparently news to me, but just what we do.
Okay, so when we started off, we talked about the challenges that the SMEs are facing, etc., and you've talked quite passionately about understanding the client. Are there particular areas within the trading communities of SMEs that you think that Reward could actually really help? Are you seeing any trends that, that's another type of customer in retail or construction, or there's another type of customer that's, you know, produce their own widgets, etc., from factories that need our help. Is there anything across that and in different parts of the country that we could alert our brokers to perhaps look at those types of clients?
Yeah, I mean, we would work across any sector. So that this is we're not sector agnostic by any stretch of imagination. We will do any sector and wherever that goes, whether that's services, manufacturing, doesn't matter. I guess what we see, our customers fit primarily into sort of two boxes really. Opportunistic clients, so people who are effectively on the hunt to acquire something, want a blank checkbook, have got some security, and we sort of sit in that box. So people who are inquisitive and want to try and obviously build an asset base. And we see people who are struggling from a credit point of view and actually just need a bit of breathing space for a couple of years. So we tend to sit in that space. So it's difficult for me to go, we do more in manufacturing or we do more in this. The key for us is, and for the network is a client who's got assets and needs cash. It really is as simple as that. If you've got no assets, unfortunately, it's not a space where you can work in. If you've got assets and they're in a different business or they're in an SPV, none of that phases us at all. If they've got assets and they need cash, then we can make a deal work.
Great, Nick. And look, just one final question from me, really, which I often ask to many of the funders that sit on these webinars with me is, what do the most successful brokers do differently?
They effectively act as an external sales team of ours. So the top guys who bring deals in, they know it's a reward deal when it comes in. And we've a couple of guys who introduce into us where you could literally copy and paste an email or an application, drop it into a credit paper and submit it, because they understand the client and they understand what we want. And people do get there once you've done a couple of deals with us. Our awkwardness is we're quite we're a bit whole of market and we'll look at lots of stuff, but it does boil down to that security piece. But we have a couple of guys who understand it, you know, what we do and where our pinch points are, and then they are an extension of the sales team now.
That's a dream for a funder, isn't it? To get
completely,
isn't it? Particularly if you're in the underwriting team. But no, very, very good. That's a dream.
You know, Adrian's been an absolute dream for
Well, as I said, the challenge in the market, as you know, is there's so much liquidity out there, and when we are seeing, obviously, by still being on the board at the NACFB helps me with some more insights from that. But you know, the loan stacking side of things in that unsecured market is a real worry.
It is.
There's concerns about that. But I don't think it's all about the intermediaries. You know, there's so much now that the SME can just get online and go down the wrong route. There are a lot more, I'm certainly seeing from a network perspective. I've spoken to some of their colleagues in networks where you've got like you know, a lot more of these sort of wongers from the payday stuff coming into the SME space, you know, and it is quite frightening if you're a businessman and you're quite naive, you just need cash, you can quite quickly trip up, you know.
And we do that. And I was going to mention, I mean, we've seen a few deals like that, not we? About 12 months ago, a new deal that was coming in, that was a client that was in, well, it was a garden centre. So you can imagine the seasonality running through with that. It did lots of trade at Christmas and lots of trade in the summer. And they'd not got the right advice and not spoken to anybody and effectively got themselves in a mess because they've been stacking loans up by going direct to all the unsecured funders. And we're talking hundreds of thousands of pounds here because they'd not got the right advice either from the accountant, and they didn't go into the commercial finance brokerage market. The minute they did, of course, said kind of broker went, what's going on here? He owned the garden centre outright, unencumbered property worth an absolute fortune, and he's paying ridiculous amounts of interest on all these unsecured loans. So we just whipped all the lot out, put a charge over the property, stabilised the business, and then said, right, stay with us for 12 months, get your house in order. It'll be a high street deal all day long. But it was just because he'd not gone down that right route, because it's too easy to go direct. And actually, if he'd gone straight away into one of your guys, he'd never got in the message.
And that's it. And that's the challenge, is that some of these people we're getting to see too late.
Yeah.
It's too, and I really feel for it, because when you get underneath it, I've seen some businesses where you think, actually, your example was great, because like, there's nothing wrong with the business. They've just got bad advice, taken wrong decisions, and they just needed that bit of help. And that is why I will continue my mantra: a very good intermediary commercial is the modern day bank manager.
Yeah, it is.
So all the things that you talked about, if you can get that. And if you looked at those NSCFB stats of 33 billion lent last year through the intermediary market, the key bit for me is that was only 13% of the SME community.
Yeah.
And it was mentioned again yesterday in dispatches, really, at the NSCFB board yesterday, that we are so slow in that commercial and business world to catch up with what's happened in the resi and the wealth management world. You know, there's a huge opportunity. They're underserved, the SMEs, for those examples we talk about. Anyway, look, I could wax lyrical all day about that, but it was lovely to catch up. And thank you. And thank you ever so much for today. I really enjoyed catching up with you. Wish you very well for your 10th year anniversary at Reward. We're looking forward to working with you and the rest of the team as we progress through this. So thanks so much for your time. Thank you.
Thank you. Cheers, Alan. Thank you. Cheers.